Good morning, traders. It is Friday, September 13th. Taking a look at the charts, we've got the SP 500, and you can see our trend analysis chart on the left. This is the 30-minute chart. More or less, we've gone from red bars, which means we are in a downtrend, to orange, which is neutral, and then green, uptrend. And we've got our cycle analysis, this gray indicator, and then our projection forward of where price should go over the next few sessions based on very short-term cycle analysis. Now, overall, the market had a nice run up, consolidated, started to run back up. Looks like we've got another session or so for the market to try to push higher based on this pink cycle bias line. So we are seeing equities trade up about 0.5% this morning. So we're going to see a gap up today. It's going to continue to push higher. But overall, we are starting to look next week for a pullback in the market. And if we look at the daily chart on the right-hand side, you can see we are right into resistance. So today, this is today's green bar, this current one you're seeing, this is futures. We are trading up. We're right into resistance, and that means the price here more or less is trading up already, so we could see the market just hold up today. We'll see where it closes on the week. Usually a weekly close is very strong, telling us what the market is thinking. We have been seeing quite a bit of selling right at the close of the session, so we'll see what goes on. But next week we could see a little deeper of a correction or a pause going forward, and we'll have to see what type of reversal we get. Obviously, this is a huge run to the upside. We could very easily see a sharp crack, pull back to the downside. It could chop around, build a launch pad to go higher, or it could break down from a topping formation and end up collapsing again. So we take it one bar at a time, and we're going to let the market do its thing. We caught the move up with the Russell 2000. Now we're back out and we're into uncertain times. It's a crapshoot of if it's going to break out or reverse. And we just want to catch this middle section. Get in, catch the strong trend, get out when it's getting close to resistance, and reload for a new trade going forward. So let's go look at some of the other asset classes. Bonds trading lower. We traded bonds. We traded a nice pop in bonds here late in the game, looking for that. As we started to get insight that the stock market was going to break to the upside, we got long bonds. We caught a nice pop and run. We got it right near the high. I think within a couple pennies of the ultimate high, or the exact penny for TLT. And then since then, it's pulled back and corrected. It's fallen through the 20-day. It's fallen through the 50-day. It's struggling here. You can see the trend bias has gone down. It's gone from an oversold condition, another oversold, and now it's changed trends to red trend. And if we look at the bias, it looks like we still got some more choppiness in the market. Maybe it's going to try carve out a bottom based on cycle analysis over the next 3 or 4 sessions, and we'll go from there. Overall, I do like bonds going forward, but obviously what moves straight up are a very strong move. Usually you see some type of sharp pullback. We're getting that. Now we're looking for some type of bottoming formation. And the way bonds and the bonds and the SP 500 move is we'll likely start to see the SP 500 start to struggle. Bonds will start to base, and then we usually actually see bonds lead the stock market a little bit. We'll see bonds starting to break out just before the stock market actually rolls over and falls. And I remember reading about this in John Murphy's technical analysis book. It's like the Bible of technical analysis years ago, that bonds tend to lead stock prices. So when we see bonds start to base and start to move out of a basing formation, meaning if we were to just draw the chart here, say we see it start to base here over the next few sessions, as it starts to break above this basing formation right here, usually it leads, meaning money's flowing into bonds before the stock market fully collapses, usually only by a couple days. So the bond markets start to break out. Hopefully we'll get some type of entry signal and we could play the next move up in bonds, and the equities market would be breaking over and putting in some top to sell off. Let's go take a look at the other safe havens. We got gold and silver. They're all over the place this morning. Huge range yesterday for gold, silver, miners. Take a look at the intraday chart. Yesterday we saw a huge gap up in gold. It pushed right into the 20-day moving average, right into this consolidation that I talked about yesterday in pre-market trading, that was going to be a really significant area. The market popped on news right into this area here, and we just saw nothing but strong selling all the way through the session. And really it's formed what you could argue here is a little pennant formation our bear flag, it could continue to move and go much lower for this equal amount of move to the downside. If we take a look over at gold miners, they really gave a huge head fake as well, a big pop and then a drop. And again, this is what I was mentioning. We could very easily see yesterday in pre-market. I was saying we could see this market pop up here. It's at resistance, and we could see that next big move to the downside. If we were to just zoom out on the price action a little bit here, squish this down, more or less, let's just throw a Fibonacci extension and get a target. More or less, we go from the high down to this low, back up to this high, carry it forward. This gives us an idea of where we could see the miners, more or less the bias of the market goes. So we've got a sell-off, we've got the rebound. This here, we've got potential selling down here, see it maybe hiccup for a little bit, and then continue to flush down for this 100% measured move. So there's still a long ways down. We're looking at $34 a share for GDXJ. It was at $43 only a couple days ago. So pretty big haircut potentially in this pattern. And silver's got much of the same pattern. If we look over at, let's pull up the silver chart. Silver, let's look the silver chart, you can see very clear. Pullback, bear flag, the second half of that bull flag. That was what looks to be the first half of this move. If we throw the second half of the bigger pattern in play here, down, low, up to this high, carry it forward, we've got potential here for the metals, silver, to really continue to sell off. So we've got this sell off, we've got this bear flag, and then we've got a hiccup here, and then we've got a 100% measured move. In fact, our cycle analysis is showing we should start to see some type of big sell-off over the next 2 sessions. And obviously 1675 is the 100% measured move on this pattern. So more or less this distance, you take that to the breakdown, and more or less you get the same distance or target down here. So there's potential. Look at the daily chart, huge red bars, and then it had a bear flag forming up in this area. It's starting to roll over, and we could see the continuation of this move down to the 75 area, somewhere down into here, which would act as this kind of support zone where the market found resistance and then came above it, found support, and then took off. So that's what we're potentially looking at for the metals market still. Looking over at, let's take a look over at energies. Natural gas down a 0.25% this morning. Again, it's had a very strong move. We caught this middle part here right up into this resistance place. We caught this safe zone where the price picked up speed. We got in, got out, thinking it could very easily roll over. It is a very volatile commodity. Instead, it's popped. It got above this long-term resistance area on the, this is a weekly chart resistance area. It's now acting as support and holding its ground. So we're going to let it continue to do its thing. It's gone up really fast, and I still feel as though it could come down in a bigger way and consolidate. I don't really want to jump in and chase it here because it can drop extremely quick. Natural gas is known as a widow maker. The way it moves, it can be very unpredictable, and the moves can be huge. So you got to be extremely cautious trading it. That's why we like to play this breakouts of clean patterns in new trends, and we want to just catch that middle part, get in, get out, because it is a higher risk type of trade. Looking at crude oil, up 0.4%. Again, I'm going on about a couple of weeks here where I just don't like crude at all. Mixed signals on our trend analysis. It keeps flipping from a green uptrend to downtrend to an uptrend to a downtrend, all over the place. Look at the daily chart. I have no interest in trading it. It still has somewhat of a bearish a vibe to it, the way that it sells off. It kind of pops up and then just gets slammed each time with some really strong selling bars, but overall just kind of ignoring it for now. I'm not getting any real clarity on trends or direction there. Bitcoin started to turn up a bit there yesterday. It is in this big pattern. I talked about it in detail yesterday that whichever way it breaks out of this pattern is going to be significant. We've got this huge rally up. We're now in this big pennant formation. Whichever way it breaks, if this is, the trend is up, it's consolidation, which is a continuation pattern. if this trend breaks to the upside, we are looking at potentially 20,000 again on Bitcoin. If it breaks to the downside, we're probably going down to 7 or 6,000 pretty darn quick. The way Bitcoin moves is sometimes it just rockets higher. You can see these huge gaps in price where it just gaps higher and then keeps on going. We've seen 20, 30% moves in a day in Bitcoin. It's happened a few times where it gaps up huge, gaps up huge, gaps up huge, another gap. It's got these moves, make it very hard to get in sometimes without having to just chase it and get into a high risk situation, because as we know, a lot of times price can gap and then sell right back down going forward. So obviously strong momentum here. These gaps, just gaps, and most of them just kept on going. But overall, big potential setting up in Bitcoin. Very tough to trade, but there is a ETF or a fund that you can try and trade Bitcoin with. It's GBTC. You can see up here the Grayscale Bitcoin Trust. More or less, it mimics Bitcoin. It doesn't move the same exact same, but it does own a ton of Bitcoin and the rest in cash, so it moves pretty close. Other than there's a bit of skew because people will pile in with this fund and move it to the upside higher than Bitcoin when they all get excited. When there's fear, it'll actually sell off more than Bitcoin because everybody's trying to get out of the trust and the trust price just falls. But overall, you get the grand scheme of things, the big picture trend without having to have a wallet and all the stuff that comes with trying to trade cryptocurrencies. I think that is it for the day, other than let's just pull up the dollar. We'll pull up the dollar ETF UUP. Again, it had opened up higher yesterday, sold off in a big way. Today it is actually selling down. Let me see if I can pull it up a bit here on FinViz. So here it is. You can see yesterday a huge range, a rally up, sell off, down again today. This could have something to do with Trump's tweet talking about how he wants rates, his poke at the Fed, saying he wants zero rates and he wants America to refinance. Obviously, if you lower the rates, that means the dollar will lose value. So maybe that has a little bit of news built into it there that's creating this kind of push to the downside in the dollar. And surprisingly, the dollar down is the last 2 days really hasn't done any real wonders for metals. They had a pop yesterday, and then both metals and the dollar sold off in a big way. So there's really no disconnect. They're trading very similar in terms of safe havens at this point. Anyways, that's it for now. Talk to you in a bit. Bye-bye.